Good afternoon, everybody, and welcome to this edition of Ask the Experts. It is Tuesday, August 30, and my name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we delve into the depths of your portfolio. Once again, what a fascinating market it is right now. Up, down, 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 up, and whatever's going to happen next, who knows? Today's concept is pretty simple. Let me look at your portfolio and help you make sense of it all. Apart from that, let's head over to you, get your portfolio questions answered. I did have one coming through via email from the Think Markets help desk. So given it's a Think Markets clients, they are getting priority here. This one's from Anthony, and he's been quite broad in his request, but I think something a bunch of stuff we all want to talk about. So the first one is natural gas. And it's, I think, absolutely fascinating story right now. It's one we've been talking about for quite a few weeks now, this idea of this looming energy crunch coming up potentially in Europe. And I'm filling because I'm trying to find the damn button. There it is. So this is the Dutch contract. Obviously, natural gas is produced all around the world and sold all around the world. So this is the contract specifically relating to demand and supply for natural gas within Europe. And we can see, what you can't see is very clearly there. Let me go to a line chart because you're getting PM fixes on these. So instead of getting a candlestick where you get a high, low, open, close, it's just a dash, isn't it, for a consistent high, open, low, close, all at the same price, because you get a PM fix from this particular data provider. If I put the line chart on, we lose some of those peaks and troughs because the high here, for example, is a bit high, but it gives us a really good general idea of what's going on. Big pullback actually last session, so from 350-ish back to 300. Quite a big percentage pullback, but small in relation to the overall trend. And this is going to be volatile. Make no mistake, when things start to go exponential, it's 50-50 as to what the next session is going to print. Is it going to be exponentially higher, or is it going to be some sort of pullback? And we've got the pullback. But the underlying trend is still very much to the upside. They're both in the short term and long term, and there's nothing so sinister here that I would have to say, well, that's it. That is the top forevermore. It could be, but we won't know. I won't know as a technical analyst until I get a little bit more information. So that's a fascinating one. This is the US natural gas contract. So this one is based in New York at NYMEX. And if I go to auto here, you can see this one trades more normally, or what we would consider to be normal. So open, high, low, close, we get some candlesticks. And it's a little bit calmer, isn't it, than the European one, because the situation is not anywhere near as dire in the US. I'd say that's a more consistent uptrend and less to suggest there that there's going to be a reversal anytime soon. Having said that, look, there are some black candles in here that you'd be monitoring. But as long as we're holding this light green zone, I don't think there's any reason to think this trend is going to change anytime soon. So that obviously, dials back to probably a Woodside is probably the most logical place to go next and have a look at the company on the ASX that's best placed to take advantage of those trends. And it is still also skewed to the upside, but you can see after the initial pop this morning, it is pulling back. That's this black body here, probably representing maybe a little bit of that pullback there in the European contract. But otherwise, look, the trend here is very much intact. There's still, in my opinion, one of the better charts out there on the ASX. In fact, probably better than better, given that so much damage was done to so many other charts within yesterday's session. So yeah, look, if I had Woodside right now, I would 100% be a holder of that, and not too stressed out about a little bit of a pullback from the highs. It's technically still up on the day, isn't it? So that's pretty good. We do have other stocks like Santos in the space, which is getting a bit of a bounce from this renaissance, I guess, of this energy sector, which was lagging a little bit. We can look at the sector overall, and to do that, I need to go here. Hold on, we'll have a look at the energy sector, which is this one. So it was flattening out, wasn't it? It was with this great flattening here, but recently picking up. So maybe we'll just have a look at a couple of others, and then we'll move on today to other things. So obviously we looked at Santos, which I was quite bearish on, as you all know, and have to concede defeat on that bearish outlook because the supply demand has turned around. I would be a comfortable hold on that one right now. Origin's probably another one in the sector that is, well, better placed than others to take advantage of that gas situation. Although a lot of these natural gas producers in Australia, less of it goes overseas than, say, a Woodside. More of it's consumed here. And the other thing with the natural gas producers is natural gas is typically sold not on spot market at spot prices. It's sold under very, very long-term contracts. So you can't necessarily go, well, natural gas prices are X and therefore Woodside should be Y. It doesn't work like that. But demand, supply, follow the trends, and the trends are still very good. I actually like this one. I think this is much better than Santos, not as good as Woodside, but this is a great push-off recovery, hold of this long-term trend. And I like the price action here. I really like the candles as well. So pretty happy with Origin. They're probably the main ones that are coming in off the top of my head. If you've got others, then certainly let me know. I think Beach is more oil than gas, but somebody will shout out and correct me if I'm wrong on that. I don't know the ins and outs of every single energy stock on the Aussie market. Apologies. So I think I've covered those two, and sector-wise for Anthony, he was also looking, and I will entertain these simply because I think they're relevant for so many other discussions we'll probably have today. But Anthony was after the iron ore price analysis, and this is going to relate back to your BHPs, your Rios, your Fortescues. I'm still pretty bearish on this, as you know, for many, many weeks. In fact, it's probably more on months now, really, since it started to change here, because here's your key supply event after we've had, building supply in the system. Short-term trends are changing, and you get this big supply event, which really is a continuation, I think, of this initial supply event here. And we often talk about this idea, and I will try and do it very simply because I want to keep moving. If you have a candle, I'm trying to think of the easiest way to do it. And if we go maybe, I think that already is a thick candle. But if you have a black candle, down candle like that, and you have this idea of some very small candles, okay, and you get this extension, this is what I call the supply side control pattern, okay? But they can be bigger, because for me, I look at this and I say, this is really a much bigger, much broader supply side control pattern. And then you've actually got a little one in here as well. So just trying to tune your eye into spotting some of these. And it really does indicate the dominance of supply, because really you're getting such a small response. So it starts off with your supply event, and the event is something that it's big, it's happened, it's getting people's attention. It's changing the way the market's thinking, and then you've got this continuation here. And often very strong signals that a trend is changing. And yeah, look, I don't think it's if this is one here, then potentially this is your sideways consolidation for your next one down. So pretty bearish on iron ore. Make of that what you will for some of the iron ore producers out there. They're all going half decent at the moment, aren't they? Because we've got these dividends in play. BHP hitting a pretty key point of supply there, around about 43. That's interesting. A couple of down days. I'm surprised they're doing so well, to be honest. But maybe their dividends are keeping them safe, and Fortescue not reflecting that iron ore chart at all, funnily enough. Lumber is an interesting chart for all of us to be aware of. It looks a bit like iron ore, doesn't it? So iron ore, key industrial metal, key component of of steel production, and representing therefore global economic growth. Lumber, similar sort of boat there in terms of being used in the construction sector. It's also a great indicator of the health of the US housing market, because this is the CME based contract, so US based contract here, and it's one of the oldest relationships in the book. When lumber's going up, the US housing market's pretty solid. When lumber's doing what it's doing right now, there's something wrong with the US housing market. The US housing market accounts for about, depending on which quarter it is, somewhere between sort of 17 and 20% of GDP, and a number of those housing market indicators, if you watch my Monday morning sessions, have literally fallen off the cliff. So that's interesting as well. If I was on lumber, I would definitely hold my short on that one. Oil, I think we can do as well very quickly, just sort of doing some macro stuff at the start of this one. I called this turn very, very quickly in the piece through here, and I think it's pretty much done what I thought it was going to do. Hit sort of mid 80s. This rally is encouraging, actually. So for the oil bugs out there, I think this might actually have some legs. So I think I'm happy to go to more of a neutral stance on oil than from a bearish stance based upon really last night's candle, which is that large white candle, indicating quite a bit of control from the demand side actually. And I would say quite a few traders now caught a little bit short. When this much control is exhibited, you can get a bit of a move just even from short covering. So I think it's got a little bit of legs. We could see back above 100 in the not too distant future. So I think all pretty supportive of our energy sectors. They were Anthony's questions. Thank you, Anthony. A good way to kick off the session. Now I'm going to get to the people that are here. We've got Perpetual and PDL. This one is coming from Keith, PPT. Oh, well, there's your supply event, isn't it? So this is a very clear supply event. And if anything, I think these candles here are very much part of a supply side control pattern. Okay, so supply side, let's just call it a CP. You know what I'm talking about now. So supply is in total control here. Demand. We often talk in these sessions about the fingerprints of supply and the fingerprints of demand, and tuning your eyes into being able to look at a candlestick chart like that and just boom, just going, aha, supply's in control here. Or you know what, demand's in control. Or demand is actually starting to take control away from supply, or vice versa. This is all supply here. I can't see any reason to be owning this stock at this point in time, because the highest probability outcome from here is that this price continues to go down. Now, I could be completely wrong. The arrows come off the bottom of the screen. I could be completely wrong, okay? And it doesn't go down, okay? And we're talking about probability of outcomes here. I could be wrong, and Perpetual does this, but you need to ask yourself, well, based upon your experience of seeing this chart 1,000 million times, what happened next in your experience? Go back and think about that chart you held, you know, knowing it looked like that, and knowing what was most likely going to happen. You know, how many times out of 100, if we call this scenario A, how many times did it do scenario A? How many times did it do scenario B, if we call that going down? If we say going sideways would be a great outcome, I think, here for Perpetual. It did scenario C. You tell me. I'd say far fewer of those times it did A. Most of the time it did B, and probably some of the times it did C. So if that's the probability, you know, if that's a skew of probability of outcomes, and this is in your portfolio, you have to say, well, why am I holding onto something that's more likely to lose me money or at best go sideways? So definitely not a buy on that one. And I'll look at the fundamentals in a second. Keith, he's asked me about my opinion on the merger, which I have no major opinion. These things happen from time to time, don't they? Perpetual buys something, wraps it in. Sometimes it works out for them, sometimes it doesn't. He's wondering if he should sell out of PDL before the merger or hang on. I don't think you want to hang on to be part of Perpetual. I don't know if it's a cash offer or not, Keith. So that's the thing, if they're offering you scrip or cash. If it's cash, that's better, because I don't think you want scrip of Perpetual for obvious reasons. Without knowing the exact terms of the deal, again, I apologise for not knowing everything that has ever happened on the ASX. I would say that this chart, just looking at what other people are thinking, and that's what technicals are, not what I'm thinking, what other people are thinking, and me giving you my opinion of what they're thinking. It's very sideways, isn't it? I mean, the long-term trend is flat, the short-term trend is up, but it's bumping into that long-term trend. If we had to give these scenarios, and this is probably an actually really good exercise for you to do, isn't it? On every stock you have right now, if we say A is going up, B is going up, and C is staying in the middle, what do you reckon, Keith? What do you reckon, based upon your experience of just looking at charts, just without uninitiated eyes, even of candlesticks and price action stuff that I teach on Tuesdays? You know, how many times have you seen this? Probably C is the most likely outcome. Maybe a little bit of A. I don't think B is that bad. So on that basis, you could get to a hold. But yeah, what are you waiting for? I don't know the terms of the deal. So if the deal is, if takeover's at 650 and it's really likely to get through, maybe there's a reason to hold onto it. If the takeover's at 550, well, you're pretty much there right now. Let us have a look. I won't look at PDL because it's getting acquired. Let's look at PPT, just out of interest, and see what we get here. So I'll type that into our Thomson Reuters Refinitiv Icon valuation spreadsheet. The stuff we get from Thomson Reuters, major global data supplier from the Refinitiv Icon product. Here's your broker consensus estimates going forward, because they are future years. And then you've got historical stuff here. You've got the rates of growth. We've gone over into the formulas there. Not supposed to see that one. And then we've got some stuff here which doesn't come from Thomson Reuters, it comes from me, and is my twisted view of the world. But putting my stuff aside for a second, we can see at the very least that the brokers, so we've got 10 of them, and these are the biggest brokers out there, of course, 1 strong buy, 6 buys, 4 holds, which is kind of interesting when you look at that chart, the perpetual chart, top left and bottom right. So if they're also positive on it, then none of them are actually buying it for their clients. Very interesting. And they've got such a massive price target as well. So it could be a little bit of a broker say, not broker do, which I find tends to be the most common outcome. Let's call that outcome A. EPS growth was compound annual EPS growth from the current 258 into FY26, so going miles out here, of about 3% per annum compound over that time frame, and with a current PE of about 10.55, using that growth rate and historical PE target. So what's a reasonable PE for this one? Something about around 12 is probably okay. I think maybe 10.6 is a little low, but again, the lower you make your target, the higher the hurdle rate it is, and you're just I guess making it tougher for the stock to become good value, and that's not always a bad thing. I do feel that 10.6, based upon all of this, is a little bit low. But anyway, then you have to go for your risk level. Is it a low risk? Is it a moderate risk? Is it a high risk stock? I don't know enough about Perpetual to tell you, but even if I was so generous and went 12 here, I have to go target, of course, and not put it in that spot. So I've overwritten my formula, 12, target. There we go. And you can just see, okay, this is me being super generous with Perpetual. It comes in, a little bit right on the cheap side there, but if I go moderate, it comes back to about fair value. So you decide what the right valuation is for Perpetual. I'm not going to tell you what it is because I don't know enough about the ins and outs of Perpetual, but hopefully I can equip you with the ability to make that decision for yourself. I'm going to say it's about fair value based upon my educated guesswork there. Okay, let's get on to the next one, which is from Craig. Craig's asking about the triple O's. Oil index ETF currency hedged. Okay, so I'm guessing the currency hedge is probably hurting this one a little, maybe, because we know the Australian dollar is a bit weaker. And I would put to you, I can answer this one very quickly, Craig. I would put to you anything that is supposed to match the oil price, all right, that looks like that when the oil, so this is the ETF, and then we've got the oil price that actually looks like this. I was going to say it's just not matching it. It's not terrible. It's better than I thought. There is still some significant underperformance though in that triple O. There is some significant underperformance in that triple O. So I'd put to you there's a better way to do it. Okay, and that is think markets, oil, CFD. So we have these things called contracts for difference, which basically move lockstep with the price of the underlying instrument. So it would be baffling. It'd be absolutely baffling for me as to why you would go for an exchange traded product when you can go straight to the source and trade a CFD on the the crude oil contract itself. And if this goes up $1, your CFD goes up $1. Okay, forgive me, but I don't know the exact deposit rate on our West Texas crude oil CFD, but I'm going to use order of magnitude. You're putting up 20% of the face value or 10% or whatever it is. So if you want to get $100 exposure to oil, you might put up $10. And if the price goes back up to $130, and I'm using totally round numbers here, your $30 profit compared to your $10 initial investment is quite substantial. Now, having said that, if you were to put up that $10 and then the price of oil went to $90, well, you've lost your $10. Okay, so that's something you need to take into account. But it gives you the best bang for your buck if you are bullish on oil, or if you are bullish on natural gas. We have a natural gas contract as well on the actual futures on NYMEX. So you're not mucking around buying Woodside hoping that it will respond to rising natural gas prices. You just go and trade natural gas itself. If you've got an opinion on a commodity, find a way to actually trade the commodity. And here's a wonderful plug for Think Markets CFD offering. Now let's have a look at the next one for Chris is asking about Nine Entertainment, which looks a little bit ho-hum, I think. Chris, any chance I can review Nine? I can review Nine. I just think it looks so boring. Let's just draw a box in there. That's very sideways. But is this part of one of these broader, supply patterns where you get this, and you get this? In terms of probabilities, that's probably the most likely outcome. We're about to interact with this area here. The short-term trend is up, and that is somewhat comforting. But buy, hold, and sell on this note. This is one that, with my own personal money, looking at a chart, I would not be in the buy camp on this. And honestly, given there's other stuff out there to go buy, which looks better, and we looked at Woodside, for example, or Origin, I don't think I can even get to a hold on this one. Now, who's to say what it's going to do tomorrow? I don't have a crystal ball, but based upon what I can see in the chart, hardly what I would call inspiring. Let's see what it looks like on the valuation. And I reckon we are going to have to adjust a few things here just to make sure everything's working properly. I actually don't think we have to adjust a lot. We've got 22 to 26. It gives me a compound annual growth rate of 0%. And that's going to occur when you think about what a compound annual growth rate is. You're comparing this number to this number. So this is the one just released probably last week on Nine Entertainment. So if it's earning 21.9 cents per share this year, or it's just logged that in the bag, and it's expected to earn 22 cents per share in FY26. That is 0% earnings growth. And let's face it, investors, smart investors, the institutional investors, they pay up for earnings growth. Okay, they don't pay up for flat earnings, for zero earnings growth. If you've got zero earnings growth, how can you deliver, a better return than potentially just putting your money in an index fund? And the dividend yield maybe is the only really attractive thing here. At least the brokers are predicting that the company will be able to maintain that yield, but without any capital growth. So this represents your potential for capital growth. So you've basically got 0% capital growth expected, and the only return you're going to get is from your dividend yield. And on that basis, that's a huge turn-off for me. I want to find growing stocks at a good price. Putting it all together, let's just a quick check the brokers here. 1 strong buy, 6 buys, 3 holds. So look, to be fair, fairly positive on it, which is odd given the chart again, and this astronomical price here. You've got to remember, brokers, they don't like to adjust their price all that much. On the way up, they tend to adjust it, and they tend to catch up. And then on the way down, those target prices tend to stay high, because in the long run, market always goes up. And if the share price eventually goes back up, the broker won't look so wrong. So that is not surprising, but a little disturbing. Moderate risk, I think, with the current economic environment, given that these guys make their money from advertising, I don't think you could go less than moderate, could you? What is the right PE? I think 12 is pretty fair. I don't think it's unreasonable. Maybe it's holding it to a fairly high account, but given the brokers are less than that in the future, I actually think we've got the right valuation here. And it's telling you that my valuation is about fair value, showing 9 at fair value, which I would 11 times out of 10 go off this rather than this, okay? Because I don't have any relationships with any corporates to continue to smooth over. If I've got a corporate relationship with Nine and I'm a big broker, it's bad PR to call them a sell, isn't it? That's just me, just speculating, of course. Brokers wouldn't do that to us, would they? Big research investment houses, they're always looking out for the little guy, you, isn't it? Because you pay them so much money. Don't be fooled. Okay, Insignia Financial, I think looks really interesting actually. So this one is for King, and I like very much white candles. The bigger the better, okay? You can only get a big white candle like that if there is a significant excess of demand in the system. And we can say, oh, why did something go up? Oh, it went up because lots of demand. You know what? You can't look at markets like that, because you can have lots of demand and the stock still go down because there was just more supply, right? So, understanding price and where price is going is about the excess of either supply or demand. So when we see these white candles, often called Maribozu when they've got no shadows on them, long white candles, it is an excess of demand. So demand is overwhelming supply. Why is demand overwhelming supply? Well, because probably on this day they released some really good results, surprised the market, and the market is having to rethink their view on this particular company. I like the short-term uptrend. I like the angle of attack. I like steep angles. That just, again, fingerprints of excess demand. White candles with very shallow pullbacks. And we know that this day here, this particular one here, looks like a gap down, but we know that was a really bad day for the rest of the market. Today, fairly muted response. So I'd probably look at this as one of those sort of demand side. Trying to type with an arrow, can't do that. Demand side control patterns. Okay. And I think volume is pretty good in terms of we're getting a nice volume influx here to remove the supply that's in the system, and it's important to see it at that point because we're at the supply zone, and that is a bit of a problem. So that's really probably my only major problem with this right now is that there's a bit of a zone in here we need to work with, and we're kind of working with it now to get rid of it. The top of that is $4. I think there is going to be some supply around here. And from a risk-reward perspective, as much as I like what's happening, I'm not sure I'm interested. So I think there's some good stuff happening here. I can certainly get to a hold on this one, a solid hold on the basis that we sort of see what happens up here. So if you had it, continue to hold it. Would be my suggestion, and see what candles you get up here. If in this zone you see the fingerprints of supply coming back in, so this sort of a candle here, that's the filled black candle, which is the excess of supply, or potentially the one you're actually probably more likely to see when you hit a supply zone. Okay, so when you're on the way there, you're going to have these white candles, but when you hit the supply zone, you might actually see something that resembles more like that. Okay, so if you see either of those candles in that zone, that might be your reason to at least take some money off the table on this one. Until then, based upon everything I can see, it is absolutely a solid hold. I will do this very quickly. IFL, I think it was. There we go. Insignia Financial, used to be IWF if I'm not mistaken, that ticker code. Doesn't look particularly cheap just yet, but that's because we need to get the right PE, and the market has in the past paid, well, again, about the same. I don't think 12's wrong for this, which would make this, with negative earnings growth, looking quite expensive here actually, if anything. So the valuation is not looking great. The brokers are a bit more positive on it. Okay, I'll let you consider that. So maybe consistent more with the looking to exit at some stage rather than get in at some stage on IFL. Let's have a look at 29M, which, if I'm not mistaken, is a copper company. David, maybe, I don't know. I come across so many of these things, and I do look at it and I go, oh yeah, what does that do? And I'll go to their website, and I'm sure I've done it for 29M. I just can't remember what they do. The reason why I've drawn that big box there is subconsciously. I didn't intend to do it. My brain just made my hand control the mouse to do it. There was honestly, there was no premeditation on drawing that box. So the fact that I just drew it without even thinking, you would have to, there's something going on there. Carl is seeing something there that he's just seen 1,000 million times before, having looked at just hundreds and hundreds, in the thousands or probably even tens of thousands of charts since the early 90s that I started looking at charts. So that's the key zone for me. This is where the supply is going to come in. This is where it's going to get real hard to go much higher than that without some significant influx here in volume and the white candles to remove the supply that is probably going to be in the system there. So even if we get up there, we've got some work to do. So on that basis, whilst I can see some good stuff happening, and this is purely hypothetical, that white candle, it'd be nice if it did that. Whilst I can see some nice stuff happening here, reasonable candles. I know we've had a bit of a pullback there, but the broader market's not great. The price action was pretty good up until that most recent pullback. So it could get to a hold, I think, on the basis that, well, let's see if we can get to sort of 215, 220 and maybe watch for the signs there of supply and potentially lighten the load. And I won't draw those candles again, but if you remember that the two types of black candles I showed you, that might occur in supply zones, they would be great indications to take profits if you had it. If you didn't have it, then for the reasons I just explained, I can't get to a buy on that one. We won't do the fundamentals on this because my guess is there are no earnings and my spreadsheet needs earnings to work. Let's go to the next one, which is Sayona Mining. This one is for Kamal, and I think this one looks pretty good. Definitely get to a pretty good on this. Straight away, I'm going to draw my box in where the supply is probably going to come in. Why is it going to come in here? I mean, why do I keep drawing these points in? Well, supply often reoccurs at areas of historical supply. How do you know that this is an area of historical supply? Well, look at that black candle there, look at that black candle there, look at that black candle there, that one there even. Okay, this upper shadow showing that on this particular day, even though the trend was pretty good, we popped up and then we got beaten down by the close, and then you get that huge supply event here, really sort of a control pattern through here. Where did it start? Well, it actually started here. It started on this day, really, didn't it? The supply around that 38-cent level started there and then reinforced through here. Areas of historical supply tend to act as areas of future supply going forward. Okay, so I do think with this area here being a significant supply zone, we need to have some caution in terms of reward to risk. So if we thought this was the best thing to buy literally today, and I was to get in, say, here at the orange zone is my entry point, and I was looking to set a stop loss. Okay, so where would be a logical point to set a stop loss? Well, you want to set it underneath points of demand, so previous points of demand act as future points of demand. So I wouldn't go any closer than that. And some people like to go 2 points. So here's your first point, here's your second point. Previous points of supply tend to act as future points of demand. So you might put a stop loss down here or something, 20 cents, 19 cents, and then if we say, well, if this is my risk, right, do I have enough reward? Do I have at least 1-to-1 before I get to the supply zone? And it actually turns out we do. But that's still not going to get me to a buy because I don't think there's enough in it based upon these candles here and the price action to get me to a buy. So good price action. All right, so we're talking price action now, trying to put different pieces of the puzzle together. This is good price action. You've seen me draw this 1,000 times, and we say that we call this trough 0, we call this trough 1, trough 2, missed it, trough 2, we call this P0, P1, so on. The sign of good price action is that the last trough tends to occur at or above the second from last peak. So that would be trough 0 and peak 1, or trough 1 and peak 2, for example. The last trough occurs at or above the second from last peak, and the separation between the two is even better. And the greater the separation, the greater the demand that exists in the system. Okay, what's even better is if you're getting extension. So if we call these, it's something we haven't talked about too much, have we? Sort of call that A, B, and if C were to end sort of here, well, we're actually losing a bit of momentum, aren't we? So this is another price action element that we haven't actually discussed a whole lot. We've talked about this idea of troughs and peaks, but obviously you want your A, your B, C, your motive parts of the trend, motive being moving, to be increasing in size as well. That's another interesting aspect. But the whole point about this trough being above the last peak is that have to understand that there are a bunch of people who got out here, right, of a stock that was in a really nice trend, and there's a lot of positivity towards the stock, a lot of talk about it in the media and the chat rooms, and here they were thinking that they are an absolute genius, right? What a genius they are for getting that high price, and it pulls back, and they think they're basically 2 times a genius now. Of course, how clever they were at T1 that they got the absolute best price, but then by around about here, say before P0, they're feeling a bit sort of foolish and thinking, you know what, this really is the best stock in the history of mankind, and I want back in. Now, I want to get back in, right? But I don't want to get back in at the current price because I got out at P1. You know, I got out at, let's say P1 is, for example, $10. I'm not going to buy back here at $11, right? Because I'm going to feel even more foolish. And if you might be able to relate to this thinking. I got out at 10, it's now at 11. I realise this is the best stock and I want it back. Well, you're going to do everything you can if it gets back to 10 to buy back in. And what that does is it creates this idea of latent demand in the system of people at that who sold there. Do we know people sold there? Of course we do. It's clear as day. They sold there. It created a peak. So we know people sold there. Some of those people, not all, but many of them will want to get back in, and it creates that latent demand in the system. Now, if you don't pull back to P1, so here we are heading now down in this segment here, if you don't pull back to P1, what does it tell you about the latent demand in the system? What does it tell you about this? It tells you that people actually can't wait. They can't wait to get all the way back to 10 where they got out to get back in. They're falling over themselves. And on top of that, you've got the buyers who are already in the system. How do I know buyers were already in the system? Well, because we were in an uptrend and we've got that excess demand. So that getting back in, that ex post regret to get people back in, combining with the excess demand that was already in the system to cause this trough to push higher again. Now, I know I spent a bit of time on that, but hopefully when we cast our eye now back over to here, right, and what's happening here, we can see clear as day that the price action here is not fantastic, okay? And for that reason, whilst I can see, okay, if I was to get in today, and there's no reason to get in today, there would be reasonably at least one-to-one reward to risk, then the price action isn't great. Now, let's say, we had a better candle today and you would take a better candle to get in. So let's say, you had something that, strong demand side signal that kind of looked like this, right? You would, and that might be more reason, then I might entertain it. But then let's also consider, well, that changes my reward to risk because my stop, I guess 2 points, you could go into here. Okay, you see how the 2 points of demand changes in terms of our stop loss. So if this is our stop loss candidate, right? And the idea is to maintain 2 points of demand to protect our stop because we don't want our stop to go off. Okay, so a point of demand is where the price is likely to bounce. Why not set your stop loss beneath a point where the market's going to bounce so you don't get stopped out? Why not set it beneath 2 points of demand? So you can see that if we move to this candle here, we form this as a trough, which is 1 point of demand. There's your second point of demand, and therefore your stop can actually be set from there to there. So you can see how this idea of reward to risk in a change is actually dynamic depending on how each candle logs in. Okay, so I know I spent a bit of time on that, but a little bit of sort of education there on tradecraft. I call this tradecraft. How do you set up a trade? How do you measure your reward to risk? SEK is the next one. I don't have to draw anything on this. I've already done it. We've got scratchings all over the place from a previous session. I wonder what I said about this in this previous session. I reckon it might have even been here. I'd say even before that white candle, because you can see where the last red line ended. And I might have said something like, look, watch out for supply. This is clearly going to be a key zone of supply in here because there would have been a lot of people who got in here. A lot of people got in here thinking that at around $25, SEK is really cheap. Now, those people who got in, they called their broker, what should I buy? Oh, SEK, it's a great company, it's very cheap. How are they feeling down here? Probably a bit foolish. Okay, and they're thinking, you know what, please please, I just want to break even now, okay? Break even. And the way you break even, if you got in around here, the way you break even is to get out there. So I probably would have talked about things like the candles you want to see in that zone. And there you go. You think I'm making this stuff up. So the candles you want to see in the supply zone, there it is right there, isn't it? There's your upper shadow. So we start off with a white candle, don't forget. This candle here started out white with demand, and then it got the price, the supply came in and hammered it, and then you had this big supply candle here, and it was lights out from there. So it turns out that it was almost really a textbook reversal from a key supply zone, and then you had another one in here. So to see it sort of occur in that zone is just magic. So I'm pretty sure I might have said last time, look, I don't think I could buy it. Maybe I could hold it, but even then, watch for this stuff. And look, here we are. Look, what do you do with it now? Well, are there any signs of demand in here? Are the fingerprints of demand coming in and saying this is a screaming buy? Absolutely not. It's quite the opposite. It still looks like a screaming sell to me. So we can see the short-term trends have turned back down. The candles are quite pathetic in terms of exhibiting demand. There's very little demand in here at all. Now, this could change tomorrow. I don't know, but what I can see is it's all supply here. It is the picture. It is a wall of supply and nobody with money trying to get in the way. I'm sorry, James, if you've got that one. Commiserations, if that's why you asked about it. I can't see any redeeming features there. If, however, James, you're short this one, then you are a superstar, aren't you? Let's have a look at poor old Seek. And now, this might give you some comfort, James, that the brokers who are no doubt out there looking after your best interest are calling it a buy. 3 buys, 3 strong buys, 6 buys, 2 holds, 3 sells. Well, that's interesting. But it's pretty rare you see sells in this space. If you've been watching me long enough, suffering through these 1-hour sessions every Tuesday, you've probably noticed, hey, very few brokers call things a sell. Why is that? Well, if you've got, let's say you've got a portfolio, let's say you're a big hedge fund or a super fund or whatever, or just an average investor with $500,000, then you go to Goldman Sachs, hey, Goldman Sachs, I've got this $500,000. You're not looking for stuff to sell, are you? All right. You're not going to Goldman Sachs saying, hey, Goldman Sachs, tell me what to sell. You're going to Goldman Sachs saying, tell me what to buy. So it wouldn't make sense, and this is where I'll stop talking about Goldman Sachs and go very generic. Goldman Sachs, I'm sure, doesn't do this. Let me say this with absolute confidence. I'm sure they don't do this. But your generic broker, right, your generic one, in brackets, did you see what I just did there, everybody? Your generic broker knows that you want to know what to buy. So if you look at their recommendation list, it's about 90% buys and 10% sells, okay? Of course. Then let me say this, or face it, or you have to face this. They'd have to really hate something to call it a sell, right? They'd have to really despise it. Yet 3 brokers despise it enough to call it a sell. The price target is absurd. It's absurd because brokers, again, this is not Goldman Sachs, all the other ones, not Goldman Sachs, all the other brokers are very reluctant to chop their target prices because it's just the signal to the world that they got it wrong. What does my model say about it? My model's not loving it, but we have to get the right PE. And the PE is much higher than 12, to be fair. Historically, 28. Now, I'd pay 28 times earnings for earnings growth, let me say, of about 15 to 20% per annum, okay, minimum. And here we are at 10% per annum. So we're lagging that. For something that's growing earnings at 10% per annum, look, I could happily go 15, like very happily. Okay, and even if this was low risk, which I don't think it is, we're still miles out on the valuation. Let's say, you know what? Let's go super generous. Like close my eyes, super generous. Let's say I went 20. It's still looking overvalued here. Okay, and yeah, not for me. Now, if I go with the consensus, and this is again horses for courses, I'm saying that's the most I would pay. This is now looking what the brokers would pay. Okay, so it's going median of the consensus going forward, and lo and behold, we get a fair value. Okay, so yeah, based upon broker numbers, $20 is about fair value. Based upon what I would pay for that much growth, it feels expensive to me. Okay, so I'm going to pass on that one. But an interesting little insight into how to look at valuations. Valuations very much in the eye of the beholder. From William, hi Carl, adding to a winning trade? Yes, please. Can you please show technicals to trigger adding to a winning trade? Well, William and I go back probably the better part of 15 years, I reckon. And William, I know that I've spent literally days with you and given you acres of materials. So go back and check those books that I've given you, William, and there's all the stuff in there about anti-winning trade. William was one of my mentor clients. I used to run a mentor program back in a previous life. And I used to literally teach all of this stuff rather than sort of just commentate on, ABC, buy or hold or sell. But there's a lot of important things you need to get right to add to a winning trade. We don't have time to go into all of those things right now, William, unfortunately, but it's 1 hour session. But if I can say anything, look, follow those fingerprints of demand. So adding to a long trade, of course, there's nothing on screen to suggest that. Well, let's have a look at a chart like Terracom. So, fingerprints of demand, what do they look like? So let's say I was clever enough to get in here, because that looks like a really nice setup to me. And then looking for really obvious demand side candles. So that looks great to me. And it pulled back, so what? That looks like a really good demand side candle to me. It's all happening above this zone. This looks like a demand side candle to me. That one's not bad. This is very solid here. So the sort of candles I like to see, that one's not great because it pulled back. But generally, when you find you take out this shadow, that's pretty good. I would have been happy to hold all the way up into this day. This day is these 4 clusters. You're going to have to take some profits. Like, you've got no choice to take some profits. Probably getting a bit more out here, and then coming back in here and here. I'm just showing the candles that I like to see here. Like here, missed it. This lower shadow into the green zone is magic. This is magic. Look at that one right there. Let me zoom in on that one. This little one, especially inside that shadow, very, very important. This is good here. This is great here. This is all good here. So once we're on that trade, the hardest part often is sticking with it. And you can see there are going to be times where you are you're sort of increasing your exposure, and you're not doing it for no reason, right? Exposure, and then you've got periods where you're decreasing your exposure, and then you're coming back in again. So I think one of the big mistakes, people who want to trade, I'm not talking about investing here, am I? I'm talking about trading. People who want to be a bit more active, take control a bit more, not rely on all of that broker advice, is that I think too many people go that, okay, this is a trade for me. Okay, this is, or they've got this notion that this is how a trade works. Like, I get in here, right? It either goes up to here and then I'm out and hit escape, because here's my entry, all right? Here's my exit. And then right about here is my pat on the back. Back. Might have a backpack on. Pat on the back, and then I'm off to look at something else and never to look at this thing again. No, well, the thing's going to keep trading, right? And the very fact you got from point A, right? The very fact you got from point A to point B means you should keep an eye on this thing. So, if there was an exit, some supply, whatever it was, and it came back to here, your journey continues. Your journey continues. So never think of a trade that's point A, B, and then the story continues to unfold. And the goal, the real goal, is to if you were to say, well, this was like talk about this idea of adding a third, so plus 1/3, and then we went plus 1/3. I'm just stylizing this. If I could type properly, trying to look down and look up at the same time, plus 1/3 here, and then this was, for whatever reason, minus 1/3, and then, over here it pops back up, plus 1/3, plus 1/3, whatever it is, or half, or whatever you feel comfortable with, minus 1/3. You can see how it's more of a journey now, isn't it? And the goal is to still have some here. So you're still holding some here, right? Because you don't know how high it's going to go. Too many people think that in terms of my entry, this is how you trade. You go, okay, plus 1, minus 1, and that's it. And then curse forevermore that this thing kept going. And that you are the unluckiest trader, investor, whatever you call yourself, in the history of mankind of trading. Because this is you, because in quotes, I'm quoting you here, not me. I always get out too early with 3 O's, right? Woe is me, all right? I know we've all done it. The key is to stop doing it and stay on these big trends. I digress. Let me get back on track. What's a good selling price for Woodside? I don't know. This is from Anonymous. Anonymous has asked me, what is a good selling price for Woodside? Well, Anonymous, let me tell you, this is going to be it. So when it gets to $48.92, you sell like crazy, okay? And you can quote me on that one. $48.92 is the answer to that question. What is a good sell price for Woodside? In brackets, I don't know. I won't know till we get there. And it throws in the wrong candles. Good afternoon, Carl. Good afternoon, Rosh. Can you please check ASN? Sure can. Now we're going for time. That is a monster. Now this is there's some uranium in the mix here. I don't know if they're still on that uranium boat. But what a ripper that chart is. Have you missed it? I don't think so. Now, this is still a live candle, so I have to go here and do the update. So off screen, I've clicked update. We're going to get the candle as of 11. I know it's a bit old now. And we'll see how it changes. If it changes at all, updating, you can't see. Oh, it actually got bigger. So, yeah, my point is that for Roche, if it finishes with your big white candle, there's still more in it, because that is just the picture of excess demand. And I know it's hard. It's hard to buy in, like after something's had such a big run. But if it can close with that white candle, there's no reason from the demand and supply that it can't go higher. Having said that, you've heard me also talk about trying to get something where the spring is coiled, right? Where the spring is coiled, and that is for me where you're pulling back to the light green zone, and then you get your signal, right? So here, I know I'm giving you perfect hindsight stuff, but that is the key signal there. And I haven't done many of my Twitter lists simply because I'm not confident in the overall market. I'm a bit of a bear right now, so I'm trying to put out as few lists as possible. And I wonder if I put one out on that day, because this would have been on that list. How amazing did it look there? So you got your short-term uptrend, your long-term uptrend. You got your volume influx, which is great. Huge supply removal. Over how many times have I drawn these today, ladies and gentlemen? How many times have I drawn those? And yet you look at where that candle closed, right? It took them out. It took out that supply. We're in a different zone. What's wonderful, actually, I like the way it pulled back to supply, tested and held on this one. Another reason potentially to buy here. And these are all still within this proximity to this, this short-term uptrend zone where the spring is coiled. Now the spring is extended. So, I can't tell you at all to sell it. It's more of if you're on it, hang on to it sort of thing. But because it's so far away from what I call my dynamic value zone, it's more prone to pulling back. So sometimes you've just got to say, well, I've missed the boat and just admire it, or just put a little bit on. If it has a nice close today, put a little bit on and then be super active. You're not in this for a long time because it is so far away from that zone. You're in this for a good time. All right, so it becomes more of a good time trade, not a long time trade. Please don't let it be a long time trade, because we all know how those ones turn out. Oh, I'm a long, we get into something because we're going to trade it, and then all of a sudden we become a long-term investor on that thing. Let's hope that doesn't happen for Roche. Let's look at KCN. I won't look at some of these on the fundamentals because I know they don't make any money, and my valuation tool needs them to be making money. Kingsgate Consolidated looks half decent. Let's face it, it's very flat, isn't it? I mean, the short-term trend is back to neutral. Long-term trend is still technically up, but it's very, very flat. The price action has gone from something promising through here, I must admit, very promising through there, because it actually took out this zone. I think it did. I would say take out that zone. So if we go back to here, I would have looked at that bloody hell. I would have looked at this. Let me try and get to, there it is. I looked at it, I said, that looks really good. And again, you can't tell the future. I mean, from a demand supply perspective, that looks really neat. The only thing that might have given you cause for pause is there's a supply zone here. You would expect some supply. And then to see this, I think, is one of those low probability sort of outcomes, isn't it? So didn't turn out this time. Is there enough in it to get excited about it today? I don't think so. I don't think there's enough there in the demand side to say that you would be rushing out to buy. It would start to look better again if it can close above this area here. So I could just give you a line. So if it closes, a nice white candle closing above here, something like this would be another reason to maybe take a closer look at it. But even then, it's you'd have to say, well, is this the best thing I can do on the day? We won't know till we get there. Probably not. But that would make it look better. For now, with the price action, let's face it, the price action is very much lower peaks and lower troughs. And more broadly, the trends are sideways. It's more of a pass from me. I don't think I can't get to a buy, but whether I could get to a hold, I'm not sure even. So it's just very flat, Daniel. I don't think I'm going to get anything here. I know they've obviously got some Indonesian gold production, so let's see if they're making money. And we don't have any broker coverage, so I can't do the valuation for you. A2Milk from Sharon. I'm glad this one came out. I haven't had a chance to look at it today because I'm doing some prep for the call tomorrow on AusBiz. But the chart yesterday, I very nearly. There you go. I should have. So I did each day I do the scan for my Twitter list. So there's my scan results from yesterday, and this is my short list from yesterday. All right, and I didn't tweet it again, just lack of confidence in the overall market. I wonder how my short list went going today. Well, that's not too bad. I still think that looks brilliant. Who brought this up last week? I can't recall. Might have been Anthony brought this up, but that was on my list from yesterday. I still think it looks great, so I'm a buy on that one. DeepYellow was on my list from yesterday. That's popped today. Greenstone, I think, is still worth keeping an eye on. There you go. Hastings, Havilah, not bad. Heading higher, actually. That's a decent candle there. HHR's pulling back. LAU's hanging in there. LNR's going up. This looks fantastic. I often get asked in these sessions, hey, Carl, we're asking you questions. That's great, but what looks good? Well, here you go. This is my list from yesterday, and that is the pick of the bunch, I would say, based upon the moves today. NWE, well, that's going. I should have probably tweeted this list yesterday because they've actually done really well, haven't they? STA, Strandline, I think looks great. That's a nice looking chart. Bit of supply up here. I don't know if that would have been my feature chart. Southern Cross looks okay. Don't think that would have been my feature chart. Yancoal looks interesting. I think that can go for another pop. And Anson was on my list. Okay, from yesterday. There you go. Anson was on my list from yesterday, as was A2Milk. Let's have a quick look at the A. So I love the chart. I think the chart looks great. We're definitely going to get some coverage here. I'm fascinated myself to see what this is. So don't worry if that's not matching just yet. We need to get the right PE, and historically it's been all over the show. How do you get a target PE for this? And that is a little bit concerning in itself. But having said that, I don't think 23.5 is actually that far off. I don't think I think that's probably pretty reasonable. So I'm going to stick with that. Low risk, I don't know enough about it to say it's absolute low risk, but I do like this growth. So we've got about 23% compound earnings growth, and I would happily pay 23.5 for that much growth, actually. So this is all looking pretty good, and it's coming out to be about fair value right now. So it's obviously had a bit of a pop today. So probably about fair value after that move. But yeah, I mean, fundamentals versus technicals. Technicals still look very good for you, Sharon. Do I think it will reach previous levels above $10 is the specific question. I probably should answer the specific question. Will it get back to $10? Well, I can say with absolute certainty, it might get back to $10. How does that sound? It will probably have a little bit of a pause around here before that's possible. However, so that's around 7. I think there's a pretty reasonable chance it could get there. There's probably a bit of supply coming in around here as well. They're the zones you need to watch out for. But I think it's turned the corner. I think that looks decent. Buy today, it's a bit far from the green zone. Yeah, I can still buy it today, assuming that candle maintains. If it becomes a big shadow, the answer is no. So wait till the end of the candle, and if you have a nice candle, it's probably okay. Do your own reward to risk calculations. I'm going to keep moving. FEX, which it almost made the list yesterday, but I tend not to put it on the list for Algis. And the reason why I don't put it on the list, you can see why it would have made the list ordinarily, is the research I did on this suggested that they've got a pile of iron ore, they're going to dig it out, and that's it, end of company. Like they're going to make a profit, they're going to distribute that to shareholders, and then that's it, end of company. So when it does come up on the list, I tend not to put it in. It's probably a bit harsh, isn't it? But yeah, I think the chart looks good. Let's try and get to the bottom of this list. And I'll tell you what the bottom is, because we're actually pretty much up on time. It'll finish with Anthony's ASX200, and I'm going to whiz through here. So no more fundamentals, just technicals from here. And we've done A2Milk, good. We've done FEX. If time's available, well, not really, James, but let's do it anyway. US stock, BerkshireHathaway, only because I'm curious to see what's happening with Warren Buffett's companies. The ticker code is BRB. It doesn't look great. I think this has turned the corner. In fact, it's probably a short trade, if anything. Might be a bit hard to short it, just given that there's a bit of demand here. But typically, when they break their trend, as this one has done so convincingly, come back, retest, fail, head and shoulders, great supply event here, not convincing last night. That looks like a sell to me. I could happily short sell that one if I was trying to build a diversified portfolio in terms of direction. So a bunch of longs, bunch of shorts, targeting good trends in each direction. I'd happily put that as a sell. Okay, reading the rest of James's comment, he's a long-term holder. Keen to understand the market sentiment. Well, that's just my opinion, James, looking at demand and supply. I could be wrong. For Rupam, let's look at DeepYellow. Uranium play. I don't need to draw any stuff on it. It looks good in terms of the trends have improved, no doubt. And it was, one of my favourite charts yesterday. But hitting this supply zone, I think, is a bit of a problem. And evidence that it is a problem is that shadow there. Now, this is still a live candle. One of the most important things I say to you every week is that we are talking about a live candle. That last candle, that can change. So it doesn't mean my analysis changes. It just means you can't apply the things I say until the end of the candle. And I would suggest to you, if it closes with a big white candle into that zone, the supply is not a problem. But if the shadow grows and it becomes one of those sort of inverted hammers, and especially around the round number as well, and given that this is the fingerprints of supply are all over this zone, I would say the dash is done for DYL for the time being, Rupam. Okay, I could probably go a hold though on this candle at this stage, depending on based upon the strength of the short-term trend. Would I be a sell? I think that's interesting. I'm sure there are people listening to me that want to know. Yeah, I'm going to go minus 1/3 based upon the candle as it is right now. Okay, if the candle goes stronger, scratch that. Okay, I don't know what the close is going to be. So come back at the close. If the shadow is this big, or any longer, I reckon take some profits on the basis of the 1/3 of the supply zone. If the candle is completely white, don't execute on that suggestion, because the supply is not coming in. Just if you're watching on YouTube, play that back and listen to it a few times. It does make sense, I promise. Okay, GTR. Very quickly, buy, hold, sell. If I squint, maybe there's enough to hold it on the basis of this candle is pretty good on some volume, and the price action, therefore, based upon this move above this peak, is returning to higher peaks and higher troughs. But the long-term trend is pretty dismal, and if I had to compare this to the best charts we've seen today, it is nowhere near the best. It would be in very average basket. So whilst there may be a reason to hold, I certainly could not get to a buy on that one, Rupam. Sorry. ALD, which looks half decent again, and it's one of the better trends we've seen, isn't it? But again, it's just not knocking my socks off. It's good, not great. Let me give it a score out of 10. I'm going to go 7. I can maybe even go 7.5 out of 10. So it's not. It's good. I just don't think it's got that explosive, it's a very scratchy, overlappy. We talk about clean price action. So when I look at a chart like this, all I see is overlap. And I see a lot of black candles, white candles, black candles, white candles. I see a lot of indecision. Maybe that indecision is diminishing somewhat. Maybe it's getting its ducks in a row. That's why I can go 7.5 out of 10. And I can certainly say with confidence this is a solid hold. If it's a buy, it would have to be the single best thing I saw in a day, and I'd be itching to put some risk in the market to call it a buy. So it's not terrible. Has uranium started its long-awaited bull run from Rupam? Maybe. maybe. Let's take a quick review of uranium stocks. Paladin, look how, they're up 15-20% over the last 3 days, but it's coming off a low base, don't forget, because they have been, that's maybe not as much Paladin, but a few of the other ones look like 92E, which is my favourite explorer out there, 93 down to 35. So the rally is off a low base. I'm certainly a hold of 92E. I think they're just in such a great spot. They're doing some great work out there in the Athabasca Basin in Canada, and there's a who's who of the biggest uranium miners in the world. So I'm a solid hold on that one. Saying Aura Energy, I think that looks half decent. Again, a bit like Ampol, give it 6 out of 10. I have to try and remember them all now. I'll stick with the big ones. Boss Energy, half decent, call it a hold. This one's probably actually the most disappointing, isn't it, out of everything? Those black candles. In theory, we've got this great renaissance in uranium stocks, and yet that one completely missed out. So that's concerning. We've talked about DeepYellow, obviously. There's, say, Peninsula, which is, conspicuous by its absence as well. That's interesting. Bannerman, which has had a huge pop, but again, off such a low base, you go, well, Bannerman's through the roof. Well, not really. So I still think there's a lot of work to do, potentially, in the sector to get those trends turned to a point where I'm saying, okay, this sector is super hot right now, like a lithium was, or energy is at the moment. So cautiously optimistic. I'm a uranium bull underneath, but it's also tempering the enthusiasm and looking at the black and white, which is the charts. I think is really important. I'll just do this one because I know there are a few people listening today who want to know about uranium. Look, I think the tide is turning, but it's a very slow tide that will turn. It's not going to be an explosion like lithium. We're still a few years away out from any major deficit. You can see spot prices haven't moved. But the spot price market is a very small part of the market. I'm losing my voice. Hi, Carl. Loving the show. Learning lots. Fantastic. Clinton, would you mind providing your thoughts on SOL? For SOL, it's still very much stuck in the middle. I think it's grappling with its own broader crappiness, pardon the French, and the positivity coming from its holding in New Hope, and therefore you're stuck in the middle. Buy, hold, sell. I don't know. Maybe there's enough to hold it. I wouldn't call that a buy, though. I won't do the fundamentals. I'm trying to get to the end and I'm losing my voice. PNV. I'll persevere. Oh, no. What happened? Barry saying it had its supply event. It sure did. Barry, hopefully you took the cue from that supply event, because generally, they indicate there's more to come. Sorry, I couldn't see that one coming. I apologise to everybody out there. I know we only do this on Tuesday, and I don't think we might have covered it last week, so I couldn't give you the heads up on it. Maybe, what was it, some news, Barry? I haven't been following it, so very sorry on that one. But probably a few people getting break even, I'd suggest, if that's the case. So it didn't work out for us. I'll look into that one. Now, James is on AD8. I'm just trying to get to the end now. Sorry, everyone. Look, it's crucial here, James. It's absolutely crucial. Is this, right? Is this a control pattern? That's what I'm concerned about. This is good. This is not as good because this comes in here, and then today's pretty indecisive. So thanks for the advice to set a stop loss on Audinate, save my bacon on this stock. Yeah, okay, good. So I don't think James is in it. Don't have to spend too much time on it. If he's still in it, I'm really concerned about, maybe give it the benefit of the doubt and say, well, stop loss under here might be a bit premature, but certainly under here, I think it's lights out. And this little chapter is over for Audinate. I hope it goes back up, but I think it's struggling a little bit here. This is from Yang. Hi, Carl. Enjoy your show very much. Thank you, Yang. Could you have a look at COE, CooperEnergy? Look, it looks better now, doesn't it, Yang? So, look, nice candles. Again, I talk about my Twitter shortlist, which I'll make a promise to everybody. I'll put them out each day, regardless of what the market's doing. I think you're all old enough, mature enough to make your own call on market conditions, okay? And I don't like to put them out because I don't like to be wrong, and I tend to be more wrong putting out buys in a bear market, right? So that's why I've pulled back on those. But chart's a chart, and there's still stocks go up in a bear market. So look, I'll put them out, and you make your own call, okay, as to whether you like them or not. That's your choice. I don't think this is one that would get on the list, but it would be one that I would keep an eye on. I think there's something building here, and I think this looks very interesting. I don't know if I'm quite at a buy. Maybe I want to see just a little bit more price action, something like this, just to see how the supply side is responding, the demand side responds to supply. So let's see some supply come in, and let's see what demand does with that supply. Does it completely capitulate? Because let's face it, the trend before that wasn't great, or does it stand up? Tackle that supply, absorb that supply and keep going. And from there, that's when it's more likely to be on one of my short lists. But it looks very interesting. It's definitely go a hold on that one. Not sure if it's a buy. Macmahon, I'm about 3 away from finishing today, everyone. It's probably in the same boat as COE. I mean, there's some good stuff happening here. And again, if we can see it just kick back off this zone, it's going to look a bit better. And the problem is I can only get to a bit better because there's a pretty decent supply zone there, and then there's a bit here, and I think it might be in the too hard basket. It's not terrible. If I had to give it a score out of 10, it's probably going to be like a 4 or 5 out of 10, but it's not up there with the ones I want to buy today, for example. COI is the next one. Just typed a V instead of a C. Yep, okay, CometRidge. Wonderful. This is the best chart I've seen today. I can't fold it. Bottom left, top right. Assuming this candle's shadow, assuming this shadow doesn't grow too much more than that. I don't want to see it grow really any more than that, because I want a full white candle on the breakout. Great supply removal through here. Through this, it's all tick, 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 tick. Let me just check the weekly chart to see if there's anything really sinister in the offing. Now, it is coming from a couple of years ago, so less important. Maybe a little bit up there, but I'm happy to give it the benefit of the doubt and say there's enough room to move. You can see here from this potential supply zone just how important it is we have a high close today also, okay? So assuming we get that high close, I'm happy to give it the benefit of the doubt and go buy on this one. This is a very strong chart, so thank you for bringing that to my attention. Barry, Anthony TER, which I've already talked about. Actually, you can see from that, we've talked about it a lot. DYL, we've talked about that as well, so I'm pretty close to the end. Last one will be comment on the ASX200, which I think is a very fitting way to end today's session. I am absolutely shocked, shocked at how strong we are today. To be honest, I thought we'd have another follow-through day given the severity of this supply-side candle, which is in a broader pattern. But again, these candles, nothing surprises me now on the ASX, and just how strong it can be at times, how stubbornly, belligerently strong it can be in the face of, let's face it, as I keep telling you, that super money that keeps pouring in. So unless there is a really motivated bunch of hedge funds who are positioning to the short side, assume the strong case. The fact we haven't pushed too much into that black candle, I think the trend will prevail, which is this long-term trend turning. Famous last words. I think we've got more downside to come. I think we'll roll over here a little bit and maybe come back and test something like that. But this market is so invincible right now. You might not be feeling it. You might be feeling, the market's very weak. I get just this sense of prevailing invincibility about the market. It shows maybe how your underlying views of some of those macro factors, which I think are quite bearish globally, can taint your vision of strength or weakness in an index. Okay, I think we're at the end. I'm exhausted, certainly, after today's session. So let me go here and say, come back for another session next week at 1 p.m. Tuesdays. If you're not a client of Think Markets, you should be. We have all the products that you need to trade or want to trade, including those CFDs on products like natural gas, like crude oil, gold and copper, and all these wonderful things that you can trade on a platform. Don't think the only way to get exposure to rising commodity prices is by buying a commodity stock, because often they don't move because of hedging and other things like that, poor management. Go straight to the source. If you want to know more about how to trade CFDs, head to thinkmarkets.com/au or give us a call. We've got some offers going on. I won't talk about them today because we're so far over time, but needless to say, we do have some juicy carrots out there for you to get started trading with us or to continue trading with us and get some great benefits if you refer some friends over to us. I'm sure you can find 4 people still trading at their banks paying exorbitant rates. Come over to us. They're going to save a bunch of money and you get a nice little kicker out of it as well. If you're watching me on YouTube, please hit the subscribe button so you can stay notified of our future videos. Hit the thumbs up button to let me know you like what I'm doing so I'll continue to do more of it. Apart from that, it has been a pleasure chatting with you today. Hopefully you learned lots. All the best for your investing. Until we catch up again. Bye-bye for now.